All right, guys, welcome to the Investor's Guide to Memphis Real Estate. My name is Dean Harris. I'm always with Douglas Skipworth. How are you?
Hey, man, I'm great.
Good. We're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to all of our channels, Investor's Guide to Memphis Real Estate, YouTube, and wherever you listen to your podcast. Show sponsors are listed on your screen. We couldn't be here without those guys, so we certainly appreciate them. Zoom calls. You guys shoot me an email, dean@CrestCore.com. I'm doing a weekly Zoom call, wide open for questions. You guys can send those in to me during that call. I've been doing them on Tuesdays and Thursdays. I'm going to narrow this down to one. So we're having groups kind of commingle anyway. So I'm going to narrow this down to one Zoom call a week, but shoot me an email and I'll be happy to connect you there. And lastly, I help buyers and sellers every day. So if you're looking to buy an investment property, sell an investment property here in Memphis, email me, dean@CrestCore.com, and I'll get you some info in there. How are you?
Great, man.
Yeah, this is a wild time right now. I'm super excited for what we're going to talk about today. But today's topic is what happened to the 2023 real estate crash. The summer of 23 was supposed to be death, crash. Everyone's out of it. You know what I heard? I heard 50 to 60% of real estate companies are going to be out of business.
Oh, right. The realtors, mortgage companies.
50 to 60 mortgage companies are going to be flat out of business and, doors shut. And some of that has happened. There has been some people get out of the business, some agents. There have been some mortgage companies close down. But there have not been
hadn't been carnage.
Golly, no. And we're going to talk about why today. And there's some proof here to show a little bit of why. But the first thing that you and I talked about when we were kind of tossing around some notes before we started here was just simple, right? This is simple economics. There's a supply and there's a demand. Yeah. Right. I mean, that's what we're seeing in every corner. I'm getting new clients call me weekly. Yeah. People listen to this podcast. Hey, I heard you on the pod. Yeah. Every single thing that we're doing, I'm getting more and more leads and they're continuing to come in. But talk about a little bit about, supply and demand and like what you're seeing and what you're feeling with your colleagues and people you're talking to.
Yeah, no, I think you're exactly right with kind of the Econ 101, supply and demand, and the two drivers being we still have an unusually low, historically low supply. Yeah. So supply is still low.
Yeah.
And that would be okay if demand dried up. But demand is not drying up for many reasons.
A lot of reasons.
A lot of reasons. I mean, for me, it's like, as you said, people keep coming into this game. Young people who are exposed to real estate and want to do it. And I think part of that is because education for real estate is easier than it's ever been. I mean, you're putting out podcasts every week. Yeah. You're dropping shorts every day. You're talking to people. You're doing Zoom calls. So people can learn how to do real estate
better than they ever have.
Quicker and better than they ever have.
Yeah.
Everybody knows somebody who does real estate. Mm-hmm. You can touch real estate. Mm-hmm. In the stock market and the bond market have volatility, and there's a little bit of a distrust of institutions, whereas you have more individual control of your real estate investments and portfolio. So it's like all of these factors and more are driving demand. And with the low supply, I mean, it's like, prices can't crash.
No, they can't. They're selling for that. They're selling. They're not. Sitting
and there has
there.
not been a price crash. I mean, prices were flat for years and years. Dipped during the Great Recession. They kind of came up. Then they come up, then they came up good. Then they have plateaued over the past year.
And I think they're gonna. I've talked about this. I think they're gonna stay where they're at for the next 18 months. So, you made a good point about new people coming in
all the time.
They're not all the time. I've had. I checked before I came in here. We buy leads from a certain place. Yeah, and the bundle thing came renewal, and that was 25. Yeah, I've had that 2 in 2 weeks.
Wow.
So that's 25 people that have come in and what they are new investors. Yeah. They're new. And you know what they don't know? They don't know 4% interest rate. They know 8.
Right. Yeah.
And they're making the deals work at 8, or they're paying cash or whatever they're doing. They're not jaded. Some of you guys maybe you're sitting there going, man, I'm not buying now. I've been buying for something. You're going to limit yourself, because here's one thing that's going to happen. And I love rubbing my little crystal ball here, right? As soon as these rates drop, our prices are going to skyrocket again. People are going to feel like they missed the boat. They're going to feel like they need to sell and do it now, because here comes these rates. And you think the prices are high where they're at now. Wait till the rate goes from 8.5 to 6 again. Where you think we're going to be? They're not going to not raise prices. You see what I'm?
Yeah, I like that.
So they're going to continue when that rate drops in a year or 2 or 3 or whenever, and it gets back down to 6 again, because it will inevitably get down to that. I don't know that we'll ever get to 3.5 and stuff. That you know what I mean?
Right. Yes.
Not ever that. 5.5 and 6.5. Yes, we'll get back down to that again at some point.
Yeah.
And when it happens, there goes your price values again. So we went up here. We're going to hold steady for a couple of years, and I think we're going to hit it again.
Yeah, and the thing is the demand is only increasing. The world's getting smaller.
Yeah.
You know what I mean?
Yeah.
The world's getting smaller. And so the demand for the real estate and investment property, especially in Memphis, we can talk about that in another show about Memphis specifically, but
yeah,
it's a great, I mean, the demand is just too great.
Big time.
To drive
those prices. Product shift is another one that I'm blaming, or I'm pointing to, as far as why the activity, why there's so much activity. Product shift. Lower price homes are selling.
Yes,
I've got more $60,000 properties that I'm selling right now than I have in the last 3 or 4 years. When I first came back here, I took a little sabbatical. It was a $50,000-$60,000 product that was sold.
Yep.
I remember my average at the end of the year in 2018, I sold 414 or 416 houses. Average sales price, 67.5.
67.
Last year, compared to, we didn't sell that many. It was over 330 or 340 houses we sold last year. 129,000.
120 is my guess. Yeah, it was
double was the average.
2x.
We're back down this year. So I'm looking at. I've looked at it the other day. We're back to 109 or 110. So it's down from where it was, because more of these $60,000 and $70,000 houses are showing up, because you have to buy that with your 8% interest rate.
Yes.
And I talked on this on the last podcast, and I think I'm veering off it. It's a huge point. And correct me if I'm wrong on this. As the $1,200 tenant used to be able to get into a $180,000 house because the owner of that home had a low rate and could afford for them to get in there. They cannot get into a $180,000 house right now. If you're coming in renting and there's a new investor. Now, if you live in it now and you're in there, fine. I'm talking about you're a new tenant and a new investor. This investor just bought this home for $180,000. He needs $1,600. He needs $1,700, and he'll get it.
Yeah,
because that's those tenants are having to move down from $250.
Right.
So it's a constant shift back down. So don't be afraid when I tell you, the $16,000, $70,000 houses are selling. Oh, I don't want that. Those are $500 tenants. No, they're not.
The rents are up.
The rents are up. So be aware that those tenants that used to be in the 160, 70, 80, they're now back down here in the 90, 80, 90, 100, $110,000 range. Those tenants are in.
Yeah.
So just understand what you're getting. It's not the worst thing in the world. All right. So
that's good.
Prices of home, former higher tenants are now lower. I talked about that. Last 90 days sales total. So let me give you some of this so you can, you love it. This is amazing.
Data done.
I don't typically do things like this. This comes across as boastful and bragging, but what I'm trying to do is show you guys
paint a picture
for you. In March, we did $3.2 million in volume. We did 26 closings and 31 sides. What's that? Closings means the actual houses we closed. 31 means the clients we represented. So we could have represented both sides. April, 2.6, a little dip in the volume. 28 actual closings. So more closings, lower prices because we lowered the volume and we're closing more houses, and we did 31 sides. And then last month we did $3 million, just over $3 million in volume. We had 33 houses closed in 40 sides. So 40 clients were helped.
Wow.
40.
Yeah.
In May. And June is setting up for a similar month to April and May. So don't let anybody tell you that you can't find deals. Don't let anybody tell you that it's impossible to buy real estate right now, because I'm showing you for the last 90 days a total of, what is this, 26? That's 40. We're talking 80 something closings in the last 3 months. maybe 90.
Yes, close to 90. Yeah.
Close
at
to
it.
90 in the last 3 days.
And over 100 sites.
And over 100 sites. And I guess the
And 90
volume
days.
number would be 5, 8, looks like about $9 million in volume.
Yeah.
And don't tell me people aren't buying houses and buying. And by the way, none of this is, for the record, none of this is residential owner occupant. This is
it's
100%
all investment
investor
property.
deals.
And not multifamily, single family.
Yeah.
So, we've been saying it for months now. There are deals happening every day.
Every day.
50 deals a day in Memphis
Are selling.
Yes. Investors are buying. I mean, that includes owner occupants and others, but there are investment deals happening in Memphis all day, every day. You're capturing a little bit of those. You're helping people all day, every day. So we're
doing a little over one a day. Don't tell me they're not selling. We're doing over one a day. So none of these are package deals.
No.
I don't have any packages that are selling. These are individuals,
One-offs.
but one-offs. I think I have one guy buying 2
Yeah.
out of this 40 from last
either
month.
listings and then the buyers.
That's right.
Yeah.
That's right.
Either helping people sell or helping people buy.
I don't let
That's
anybody
good.
tell you that this market is crashing, because it isn't. It isn't. From a real estate standpoint, it isn't. People are using this as a hedge on inflation. I had 2 guys last week call me. They're taking money out of the stock market. They're going to come and dump it into real estate. Why? Because of the protection of the hedge of the inflation and the rent. It's amazing what these guys are doing.
It's always been in it. That's a great point about in real estate being an inflationary hedge.
Yeah.
So all that means is that the stock market is volatile. Inflation, real estate appreciates, and real estate, cash flowing real estate, you can raise the rents. So.
Yes.
And again, the rents rise based on the wages, or the productivity, or the monthly income of the tenants.
Yeah.
We've talked about that. So as inflation increases people, what their take home pay is, what their paycheck is, as that goes up, rents go up.
And tenants take care of 5 things. You can't say that.
Tenants take care of those 4 things. They pay their housing, their utilities, their transportation, and their food. Like, those are the 4 things that they don't skimp on. They never miss.
So you can hedge your bet with inflation, on your hedge your inflation bet with real estate.
Yeah.
You know that the tenants have got to do 5 things if the market does go bad, the economy goes bad. They've got to do these things. It almost seems silly not to do this if you're looking at a big pile of cash in the market, or you're looking somewhere else and it's not performing like you think it should.
Yeah.
Because this is, or 90 other people think so.
Well, and I was gonna say is that I don't know if you're preaching to skeptics. I think you're preaching to the choir, right? I think these are the people who are doing this and are clearly doing it, and that are driving that demand. Like, that's why why the people are back. You open the door and it's just a sea of people waiting to come in. They only can come through one at a time.
I think I'm doing both in that. I think I love to talk to the skeptical people, because I'm like, hey, educate yourself a little bit more on some data. Then the ones that I'm talking to the choir, I think I'm just reiterating what you're already thinking and agreeing, and giving you proof and showing you exactly why you believe in that, and just giving you a little bit more affirmation. This is the right thing.
And it might be to the choir to come on down front. You know what I mean? Like, you're in the choir, but come on down front.
That's right.
So
anything on like a national, global economic standpoint that you can touch on that might be affecting some of this demand and some of this, move to real estate?
I mean, I think we talked a little bit about that with stocks and inflation. The volatility of the stock and bond market, and the bond prices have gone from low to high, and what that's done. I think the only things we haven't talked about is the globalization stuff, in the sense of the world is flat because we're globalized, but there's a lot where, through my childhood, it's all been about offshoring, getting everything. And now there's a lot of talk of onshoring, which makes things a little clunkier and a little more expensive. Mm-hmm. You have a little more control, but it keeps the wages here. It keeps wages here in the United States increasing.
Yes.
So the borrower, the consumer, the buyer, the tenant, they have a job. Unemployment is low.
Way low. Mm-hmm.
They have a job and they have money. and they have more money. There's modest inflation. It's not out of control.
Yeah.
It's not low.
Yeah.
It's not where the Fed wants it to be, but it's modest.
Yep.
So people have the money.
Yeah.
And so that makes a huge difference. If people have money, that changes.
Before we started,
it changes your psyche, how you feel, your emotions if you have a paycheck coming in.
we were talking right before we started this, right? Literally right before we started recording. And the one thing that we were saying is that, people do have money. It is out of all of these deals that I just got done talking about, let's just call it 90 of them, 85 to 90% are
Cash buyers.
money.
Cold, hard cash.
What I thought we were crashing. Like no one would have this kind of cash. So
Yeah, good point.
and it's one reason why, on a personal note, I sell this product, right? I've been in the business 22 years. This sells when it's good. And now I'm proving my theory. Am I bad, which I don't think it's bad, but the interest rate makes some people feel this is bad. It's still selling. We're doing record numbers of cash deals.
Numbers.
Yeah.
And that, again, we've talked to wholesalers we work closely with.
Yeah.
We talked to hard money lenders we work closely with.
Yeah.
Show sponsor Core Lend
Yep.
having great months because of the banks being tight, because of still people buying, because of prices being high. They're having, thank you to them. Property management, seeing them. CrestCore Property Management, our show sponsor, is seeing investors come in.
Yes.
So it's
a great time. Show sponsors, property management, CrestCore Property Management, Core Lend Financial, Will Griffin at Griffin, Clift, Everton, Mashmeyer, Local Title, Odyssey Construction.
All of them.
All of these guys are seeing all of the same type of growth and development that we're seeing. They're all giving us the same feedback.
And 6 months ago, everybody was saying it was, find a side hustle.
Really?
Right? Like things are going to be hard.
Yeah.
And I think it's been records for some of those folks.
Yeah.
Records.
Yeah.
So I think that's what you wanted to talk about today. And I think obviously those micro trends that are happening. And I think, Warren Buffett's great because he's always like, don't bet on America. I mean, you just think about the last decade where you can look at what the stock market did over the last century.
Yep.
What the stock market did. I don't know. I have to go back and look.
Yeah.
The thousands of percent that it increased over that time. And you had the Depression. You had World War I. You had World War II. You had the Cold War. You had Vietnam. You had all kinds of things that we saw with 9/11 and the internet bubble and the Great Recession and COVID. And I mean, over that century, and his always thing is like, just don't bet against America and what's baked into our DNA here.
Yes.
And what I would say on that, and I said baked into our country's DNA of like this entrepreneurialism, a way to advance, and in even that just the free market of taking care of yourself by helping others. And where I'm going with that is AI, artificial intelligence, the productivity gains that are gonna come from that are gonna continue to make workers' wages increase because you're gonna be able to do more work per hour than you used to could.
Yes.
We do a little book club and we're doing 5 Dysfunctions of a Team by Patrick Lencioni. Great book. And I was like, man, I got to put something together, put some questions together because it's not really set up for questions. So I was like, you know what? I'm going to just get on Chat GPT. And I was like, hey, Chat GPT, will you write me a 1-page summary of 5 dysfunctions of a team and then give me 10 discussion questions? And I went,
spit it all back out.
And it spit it back out. It took it 30 seconds, 60 seconds to write a 1-page summary of the 5 dysfunctions and what they are, and then 10 questions about how we could discuss it as a team. And that would have taken me
an hour
to think about it and write it out and reformat. And it's good enough.
Sure.
It might be better. The question, it's just, and then you can edit it and you can make it's just, so all I'm saying is like the macro trends, like those productivity gains that are coming are going to continue
to increase wages,
which will continue to fuel demand, which will continue to increase rent prices and on and on and on of like things aren't going down.
No.
Drastically going down and staying down.
No, because they don't. You just hollered off a whole 100 years of tragedies and here we are, still selling.
And I've told this before. In that century, there was the Spanish flu. I read a book about a guy who wrote in 1960 something. He wrote his biography, and he had worked from the teens, or he was born in the late 1800s, turn of the century, working, and had tragic stuff. All his life had successes. The Spanish flu, he lost a child. It was one paragraph in a 200-page book. Meaning that COVID, like you don't even talk about COVID anymore. And we like we said here, COVID, 9/11. I mean, it's just a bullet. COVID is a bullet point. These things become bullet points in the future.
Yeah.
Because life goes on.
It's important to look at it that way so you don't get absorbed in what's going on, the immediate. You need to think a little bit about the immediate, but don't get so absorbed in what's happening right now. One reason why we don't watch the news in my house. No news, period.
Yeah.
Period. Stay away.
Yeah.
Hey, great topic today. I was
Super
excited
great.
about this one because it was, it popped in our head about, all we heard in December and January was, well, everything's crashing in the summer of 23. And I don't see anything in the next 6 weeks happening that's going to be a whole lot different than what's been happening.
Not for residential investment property real estate. Nope.
Thanks for coming in. Great topic today. If you guys have any questions, dean@CrestCore.com. We will be back next week. We're going to talk about why should you invest in Memphis, Tennessee real estate.
Oh, great follow-up to this. Like, hey,
that's exactly right.
I love it.
Great topic. Man. Okay, guys. Thanks. See you soon.